Welcome to The Explainer. Today, we're digging into a really fascinating story from the world of hospitality. You've got the tech disruptor, Airbnb, taking on the legacy giant, Marriott. I mean, they're both absolute titans of the industry, but you'll see they took completely, and I mean completely different roads to get to the top. Okay, so let's just dive right into the central mystery here, because the market has rendered a pretty surprising verdict over the last 5 years. Look at this. While Marriott stock absolutely soared, up over 137%, Airbnb's actually stumbled, dropping about 9%. Now, you'd think the fast-moving tech company would be the obvious winner, right? But the market is telling a very, very different story. So what on earth is going on here? Why did the old-school giant thrive while the tech darlings stumbled? That's the question we're going to answer. To solve this mystery, we have to start at the very foundation, their business models. They are just fundamentally different. One's a digital platform, the other's a physical franchise. And believe me, this difference is the key to everything that follows. So at its core, it really comes down to what they're promising you. Airbnb, well, they're all about making sure you can trust the person you're booking with, with reviews and secure payments. Marriott, on the other hand, is selling you trust in the room you're booking. They're promising clean sheets and the same quality of service no matter where you are in the world. And this table just lays it all out perfectly. You see, where Airbnb's inventory comes from everywhere, it's crowdsourced, Marriott's is professional. Where Airbnb makes its money on service fees from those transactions, Marriott earns franchise fees. And where Airbnb is spending a ton of money on tech and marketing, Marriott's costs are all about brand oversight and operations. Okay, so let's follow the money, because this is where it gets really interesting. We're going to see how these two different roads lead to wildly different places, because financially, these companies are worlds apart. First step, let's talk gross margins. And wow, this chart is staggering. Airbnb's asset-light model, which just means they don't own the physical hotels, is incredibly profitable right off the bat. The vast majority of every single dollar that comes in the door becomes gross profit. Get this, 83.1%. That was Airbnb's gross margin in 2024. That is just an insane number that shows you the pure power of a platform model. For every $100 in revenue, more than 83 of it is gross profit. But, the story doesn't end there, not even close. Having high margins is one thing, but what you actually take home, the net profit, that's a whole different ballgame. So if they're making all this gross profit, where did all the money go? And here is the plot twist. For years, while Airbnb was practically drowning in red ink from all its spending, just look at that massive loss in 2020. Marriott's leaner, more predictable model was just chugging along, delivering these steady, consistent profits year in and year out. So this huge difference in profitability, it really boils down to a core philosophical divide in how they spend their money. It's that classic business battle. Do you reinvest every penny for growth, or do you return that cash to your owners? So on one side, you have the tech brain, Airbnb pouring over $2 billion into research and development in 2024 alone. That's their engine. Then you look at the other side, the franchise brain. Marriott focuses on super lean operations and, get this, spent zero, literally zero, on R&D. And this philosophy extends all the way to how they handle their capital. This chart says it all. Marriott has this long, disciplined history of rewarding investors, just sending billions back to them every year. Airbnb, true to its Silicon Valley roots, used all its cash to fuel growth. It's only just recently started to return capital. So here's the crucial point. By consistently buying back its own stock, Marriott actually reduced the total number of its shares out there by 15% over 5 years. Simple math. Fewer shares means each one that's left is more valuable. That directly helps the stock price. Now, in stark contrast, Airbnb funded its massive growth by issuing new shares, especially when it went public. This increased the total number of shares by a jaw-dropping 142%, which, of course, dilutes the ownership stake of every single person who already owned a piece of the company. Okay, so let's bring all these pieces together now. We've seen two totally different models, two different financial stories, and two totally different ways of treating their cash. Let's see how the market put it all together to deliver its final verdict. And this table really sums it all up, doesn't it? We've seen these two completely different playbooks. You have the high-margin, high-growth tech platform on one hand, and the stable, disciplined brand franchisor that's all about shareholder returns on the other. And here it is, the final fascinating twist. After these wildly different journeys, the market now values them almost identically. The scales are perfectly balanced. Their total company values, their market caps, are nearly the same. It means investors are now willing to pay pretty much the exact same price for $1 of earnings from either company. How crazy is that? So the big takeaway here is this. The market's preference for Marriott over the last 5 years wasn't some rejection of Airbnb's model. Not at all. It was a reward for Marriott's disciplined strategy of consistently giving cash back to its investors. Both paths, the wild, volatile one and the slow, steady one, have somehow led to the exact same destination. And that, of course, leaves us with one final big question. As Airbnb gets more mature and starts its own capital return program, the next 5 years are going to be a whole new chapter. So will the market finally pivot and reward the high-margin, newly profitable tech leader? Or will it stick with the consistent, disciplined incumbent it knows and loves? The tale of these two models, well, it is far from over.